The Ichimoku Cloud indicator is extremely popular, and yet many traders still don't use it correctly. This is because the indicator has many components that can overwhelm traders. However, if you use the indicator correctly, it can show you the trend direction of the market, support zones, resistance zones, the market momentum, and profitable entry signals. The indicator even projects these signals into the future, showing us future predictions. This makes the indicator extremely versatile, meaning that you won't need to have 5 indicators on the chart. Instead, you can become extremely good at using the Ichimoku by learning how the indicator works so that you can use it correctly to enter into profitable trades. Now that we have gotten that out of the way, let's start. The Ichimoku Cloud indicator is actually a really uncomplicated indicator if you understand its components. The components of the indicator consists of 5 lines. The conversion line, baseline, leading span A, leading span B, and lagging span. The first component we mentioned is the conversion line. This line shows the midpoint of the highest and lowest prices of an asset over the last 9 periods. This means that the line can show us an asset's short-term price momentum. Here we have added the conversion line to the chart. As you can see, the line mostly offers short-term support. Like we previously mentioned, we can also see that the line reflects the momentum of the market. Whenever the price is trading above the conversion line, we see that the short-term market momentum is bullish. The opposite is true when the price is trading below the conversion line. Whenever this is the case, the short-term price momentum is bearish. As you can see, the indicator can't be used well on its own since it only shows short-term trends, so let's take a look at the components that have been combined with the conversion line. A component to spot midterm trends, support zones, resistance zones, and market momentum is the baseline. The baseline is very similar to the conversion line. However, as you can see here, instead of showing short-term price momentum, it shows longer, medium-term price momentum. This is because the baseline plots the midpoint price of the high and lows over the last 26 periods. If we take a look at the baseline, we also see that it acts the same way as the conversion line, offering midterm support to the price action. We also see that whenever the price is above the baseline, the market will have a bullish bias, and whenever the price is below the baseline, the market has a bearish bias. The Ichimoku Cloud, also known as the Ichimoku Cloud, is the most prominent component of the indicator. The component also consists of the leading span A, which is the green line, and the leading span B, which is the red line. Unlike many other indicators, this cloud projects itself into the future. This allows you to get an indication of future support and resistance levels. Whenever the leading span A crosses above the leading span B, the Ichimoku Cloud turns green, indicating that the trend has switched to an uptrend. The opposite is true whenever the red leading span B line crosses above the green leading span A line. This indicates a downtrend. The last component of this indicator is the lagging span, which shows the closing prices 26 periods behind the last candlestick. Using this indicator, you can spot similarities in the current price action with past price action. By using the lagging span, you can also spot trends in the market. Whenever the price is trading below the lagging span, it indicates that there is a bullish trend in the market, and whenever the price is trading above the lagging span, there is usually a bearish trend playing out. The most common way of reading the Ichimoku Cloud is by looking at the thickness of it. If the cloud is thin, this indicates that there is a weak trend. However, if the cloud is thick, it indicates that there is a strong trend playing out. This way we will also be able to filter out ranging or consolidating markets. From this we can assume that it's not a good idea to enter into a position when the price action occurs within the Ichimoku Cloud. It's also important to note that the longer the price stays below or above the cloud, the stronger the trend is, and the more resistance or support it will provide. To enter into a position, we will need multiple components of the indicator to signal that the trend has switched. As you can see here, the price crossed below the baseline, indicating that the trend has switched to a bearish trend. However, the Ichimoku Cloud is green. Because of this, the sell signal is weak, and it is not recommended to enter into a position based on it. Here we see that the price crossed below the baseline, but this time we also see that the Ichimoku Cloud is red. This means that there is now a strong sell signal. As you can see, the same goes for buy signals. Whenever the price crosses above the baseline and the Ichimoku Cloud is green, the buy signal can be interpreted as strong. This type of pairing can also be done with other components of the indicator such as the lagging span. That's also what makes the indicator different from others. The Ichimoku has built-in components to verify and validate its own signals. Now that you know exactly how all of the components work, let's take a look at how we can use the indicator to enter into profitable positions. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade. The best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of Henko Trade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with Henko Trade. Sign up via the link in the description to register with Henko Trade and get access to all of these perks. Let's first add the indicator to the chart. Head over to the Indicator Search tab and search for the Ichimoku indicator. Select the indicator made by TradingView and add it to the chart. After that, navigate to the indicator settings and click on the Style tab. We will be changing the baseline color to white and change the conversion line color to a lighter blue to make the lines easier to see. That was all that we needed to do. Now let's take a look at when we will enter into a position. As you can see here, the price is trading above the conversion line, indicating that the short-term trend is currently bullish. We also see that the price has crossed above the baseline, indicating that the mid-term trend has switched to a bullish trend. To validate this signal, we will first take a look at the Ichimoku Cloud. Firstly, we can see that it's green because the leading span A is plotted above the leading span B line. If we take a closer look at the Ichimoku Cloud, we also see that the price is no longer trading inside it. As you can see here, this was the case, indicating that the market was consolidating and that there was no strong trend, showing us that a bullish breakout has also occurred. Finally, we also see that the Ichimoku Cloud is thick, showing us that this bullish trend is strong. Since all of the components we currently have enabled are signaling that this is a valid buy entry, let's enter into the position. We will place the stop loss slightly below the most recent support zone. For the take profit, we will target a 2 times risk to reward ratio. Now let's see how the trade plays out. For the next entry, let's disable the conversion line and enable the lagging span. Here we see that the price has crossed above the baseline, which shows us that there is a bullish midterm trend. However, to confirm this signal, we will check the other components of the indicator. This way we can verify the strength of the signal, because we don't want to enter into positions based on weak signals. Here we see that the Ichimoku Cloud is green and thick, indicating that the trend is strong. As the final confirmation, let's use the lagging span filter. This line shows us the closing prices 26 periods behind the last candlestick. This allows us to see similarities between the current market relative to the earlier market conditions. If the price is trading below the lagging span, then the strength of the signal will be considered stronger. As you can see, this is the case here. This means that all of the components of the Ichimoku are indicating that the buy signal is strong, so we will enter into the buy position. We will place the stop loss slightly below the most recent support zone. For the take profit, we will target a 2 times risk to reward ratio. Now let's see how the trade plays out. We can also enter into positions if the color of the Ichimoku Cloud isn't aligned with the trend. As you can see here, the price is trading below the baseline. We also see that the price is trading below the conversion line. Both of these signals indicate a bearish trend. However, this time, instead of using the Ichimoku Cloud as a confirmation, we will use it as the entry signal. When the price closes below the red leading span B line, we will enter into the position. As you can see, this occurs here, so let's enter into the position. We will be placing the stop loss slightly above the most recent resistance point. For the take profit, we will target a 2 times risk to reward ratio. Now let's see how the trade plays out. As you can see from these entries, the Ichimoku indicator can be used in many ways. I hope this video could showcase some good ways to read and utilize the Ichimoku indicator. If you enjoyed the video, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.